With property pledging, you will get to withdraw your CPF savings all the way down to the basic retirement sum. Hashtag take control of our money. But is it actually a good idea to do so? In this video, we'll be going through everything you need to know about property pledging. What exactly is it? How does it work? Then I'll be analyzing whether you should pledge your property to draw down your CPF savings or not. But before I start, do join my 8,000 members Telegram chat group to discuss anything related to money or ask any questions that you may have. So, as you may know, once you turn 55, CPF will transfer your CPF savings up to the full retirement sum into your new CPF retirement account. After that, your SA account will be closed and any remaining funds will be transferred to your OA. Your OA will turn into an ATM where you can choose to either withdraw your money whenever you want or leave the money there to earn a steady POMBP 2.5% interest every year. On the other hand, if you did not manage to save up to the FRS in your RA, if you were born in 1958 and after, you can only withdraw at most $5,000 from your CPF after 55. And at 65, you can only withdraw up to 20% of your CPF savings, including the $5,000 that you withdraw after 55. But then, what if you want to withdraw more money from your CPF? Because, work my entire life now, I want to get back my money. So, this is where property pledging comes in. With it, you will get to withdraw your CPF savings all the way down to the basic retirement sum. For example, in 2024, the BRS amount is $102,900, while the FRS is at $205,800. And if you have achieved the FRS at 55 this year, by doing property pledging, you'll be able to withdraw down to the BRS and get back $102,900 from your CPF. Though, there are a few fine prints here, because not everything can be withdrawn. First, any top-ups and CPF transfers made under the retirement sum topping up scheme, or basically the money that you top up to your special account or RA, are locked up in your CPF and can't be withdrawn, even if you had pledged your property. Second, any interest earned in your CPF life also can't be withdrawn. What? Why? I thought that's my interest? That's because when your CPF life premiums have been used up, future payouts will then come from the interest accumulated in this common pool. So, to make it fair, interest earned in CPF Life are shared among all the CPF Life members in the common pool. Basically, it's not your interest, it's our interest. So, how does property pledging work? First, it doesn't matter whether you own a HDB or a private condo in Singapore. As long as you own a Singapore property, you can use it for pledging. In order to be eligible, your property lease must last you up to 95 years old. However, you won't be eligible if your property is a HDB 2-room flexi flat or is under the lease buyback scheme. Then, if you are a co-owner of your flat, you will only be able to pledge up to your portion of the property value. For example, the current BRS is $102,900. So, if you want to pledge your property, your share of the property needs to be worth at least $102,900, so that the total combined value of your BRS and property adds up to meet the FRS. Then, as mentioned earlier, from 55 onwards, once you pledge your property, you'll be able to withdraw your CPF savings down to the BRS, excluding the amount that you top up to your SA and RA and CPF life interest, of course. But here's a question. If I pledge my property, does the government own my property now? Quick pause. If you have a home loan with banks, listen up. When interest rates go down, you can do something called mortgage refinancing, where you take out a new loan from another bank, typically with a lower interest rate, to replace your existing mortgage, thereby saving on monthly repayments. But which bank has the best mortgage loan right now? It can be super tedious to go and check one bank at a time. And that's where Property Guru Finance can help. Property Guru Finance is an online mortgage marketplace that helps to simplify every step of your home loan journey. And yes, that includes refinancing. With their innovative Smart Refi feature, you can now check your refinancing eligibility and see your potential savings in under 2 minutes. To use it, you can head over to Property Guru Finance homepage. Under the Refinance menu, click Track Your Savings and start Smart Refi. Then just answer some quick questions about your current mortgage, and with that, you now have a personalized refinancing proposal. With this proposal, you will now know whether you should refinance now or later, how much you could potentially save by refinancing, and what are the best refinancing home loans based on your unique needs. Property Guru Finance isn't just about online tools. It also has a team of dedicated mortgage experts ready to handle the end-to-end home loan refinancing application. So if you decide to proceed with your refinancing, You can just simply click Customize and book a call with one of their mortgage experts. Property Guru Finance has access to the best refinancing rates from 13 major banks in Singapore. Its in-house mortgage experts will help you compare rates and craft a refinancing plan tailored to your specific financial goals, whether it's saving money each month or freeing up cash for future plans. So if you are curious about refinancing, head over to the Property Guru Finance website, try out Smart Refi, and see if it's time to make your home loan work smarter for you. Technically, you only own your property for 99 years, but that's not the point. The point is, pledging your property won't change your home ownership at all. You still remain as the homeowner. This means you are free to sell or rent out your property whenever you want. The only thing that's different is that if you ever decide to sell your property, you will need to return the amount that you withdrew from your CPF RA plus the accrued interest. Though, if your flat was sold at market value or higher and the sale proceeds fall short of the amount that you owe to CPF, you won't have to return the accrued interest owed. After the latest removal of CPF SA at 55 saga, I'm sure many people are starting to feel that they should withdraw as much money as possible from their CPF. Because, later the government makes more changes and I cannot get back my money, then how? In that case, pledging your property to withdraw down to the BRS might seem like a smart move, right? But check this out. If you are turning 55 in 2024 and have achieved the FRS, when you turn 65, you can expect a monthly payout of between $1,560 to $1,670 under the standard plan. But by pledging your property and withdrawing down to the BRS, the payouts will drop to just $840 to $900 a month. Is the lower payout enough for you to survive on? According to the Minimum Income Standard 2023 study, a single elderly person aged 65 years and older will need around $1,492 a month for a basic standard of living. And that's just for 2023. If you factor in a 2.6% inflation, in 10 years' time, this number would go up to $1,928. So clearly, just having a $840 to $900 payout a month is not enough to survive on. But of course, you still have the $102,900 that you withdrew, right? You could of course use the money to make up for the shortfall in order to meet the basic standard of living. But the problem is that if you just use $600 every month, this amount will be used up in just 14 years. And this calculation does not account for inflation. If you add inflation in, the amounts will run out even faster. But of course, you are smart and you know how to invest the money. So what if you have invested the money and grown the money instead? Would that be enough then? Assuming the market gave anywhere between 5 to 9% average returns for 10 years, your portfolio would have grown to anywhere between $167,000 to $243,000. Then at 65, if you had just left that money in your CPF RA, it will be giving you an extra $720 payout every month. In comparison, if we use a 4% withdrawal rate, only the portfolios that have an 8 or 9% return will be able to give a similar or better payouts as compared to the extra payouts from CPF. And if we delay the payouts to 70 years old, only the portfolio with the 9% return will be able to outperform CPF Life's payouts. CPF Life is starting to look very attractive leh. But here's the catch. CPF Life payouts are fixed for the rest of your life, while investment portfolio payouts will continue to go up as the portfolio grows. For example, the portfolio with a 5% return will exceed the start CPF payout at 65 portfolio at 71 years old, and will exceed the start CPF payout at 70 portfolio at 76 years old. And if we factor in Singapore's long-term average inflation of 2.6%, we can see that the purchasing power of CPF Life's fixed payouts are going down over time, while the investment portfolios continue to grow. So essentially, the investment portfolios are hedged against inflation, whereas CPF Life payouts are not. So then, should you pledge your property and withdraw down to the BRS? Let's start with the pros first. First, by pledging your property and withdrawing down to the BRS, you will have more cash on hand at 55. This could be used to pay for emergencies, such as healthcare costs or sudden retrenchments. Or if you don't really need the money, it can be invested and grown instead of just getting a fixed monthly payout from CPF Life. But then, the first downside is that you will get a much lower payout. If you don't have an existing investment portfolio, the lower CPF Life payouts will be difficult to give you a basic standard of living during retirement. The other downside is that while putting that money into investments may give you higher payouts, it can also give you lower payouts if you have invested the money wrongly or if the market suddenly jibaboom and crashes. This is an important consideration for retirees who may not have the luxury of time to recover from market downturns. Okay, here are my thoughts. While pledging your property lets you get back some money from your CPF, if you are someone who has limited cash flow and don't have much retirement savings, it's better not to withdraw the money down to the BRS. That's because you might end up in a situation where your withdrawn funds gets used up and you are stuck with lower monthly payouts that's not even enough to maintain a basic standard of living. And that will be sibei bad. According to the OCBC Wellness Index 2023, about 40% of Singaporeans haven't even started planning for retirement. For them, CPF Life would play an important role as it is able to provide predictable monthly payouts during retirement. But what about those who already have a sufficient cash flow and investments which can pay for their retirement expenses? Should they pledge the property and withdraw the money out then? Personally, I still feel that it's better to leave the money in CPF Life. That way, you will get to enjoy a predictable return from CPF Life while also growing your money from your investments. Best of both worlds. In my opinion, property pledging would only make sense if you are someone who has a very big investment portfolio and doesn't need the payouts from CPF Life at all. In that case, pledging your property can help to unlock some extra funds from other opportunities without compromising on your retirement lifestyle. Anyway, that's all for this video. Hopefully, you found this useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.